Ladies and gentlemen, Tom Lee gave an interview and he highlighted two possibility of where the stock market could crash in 2026, leading to a possibility a very volatile year that's coming. Let's watch what he says and what are the things that we should do as investors to protect ourselves. Let's watch on, shall we? The coming big crash of 2026. Where is it going to come from? How long it'll last? How deep you'll go down? I think these are the questions that we do have. Tom Lee gave an interview where he gave a prediction of where 2026 is likely to hit on a high. But before the high is hit, it's not going to be a very smooth journey. So I think it's worthwhile watching what he says because he has been right so far for many years. And whether he will turn out right or not, at least get ourselves prepared for it. Now, the coming 2026 turbulence, according to him, will likely to be very severe, maybe even eclipse the 2025 turbulence that we have. And yet, there are many reasons why eventually it will end up strong. And he predicts that the stock market will go through a deep correction, then recovery. So, what all these things will have in an implication to us is important because if this were to come true, we need to know the roadmap ahead and prepare ourselves. So, 2026 is likely to be a pivotal year on the macroeconomic scale and more importantly on a geopolitical level. So, number one, why a crisis is likely to come is because the Federal Reserve chairman will be a new one, and the stock market and the financial market is likely to test the resolve of this new Federal Reserve chairman. So, history has shown that in most cases, when a new chairman is being appointed, he will be tested within 12 to 18 months. So, this is likely to be. We'll talk about that later. Second is the Supreme Court in US could deliver what I call a fiscal bomb. So they are trying to decide on the legality of Donald Trump's tariffs across the world, and if they rule it against the legality of it, there could be a possibility of a massive destabilization. So all this could certainly turn out to be a surprise for the stock market in a negative way. The stock market is likely to end good at the end of the 2026 time period, but it's likely to go through quite a lot of turbulence. Now, to be fair, for the last few years, he has been gaining powerful numbers for many years already. So to continue this kind of momentum is really at this juncture unthinkable because that would mean that the S&P 500 is going on a exponential rise non-stop. However, there are strong bull run factors, especially on AI and things like that. But the frank truth is that we're going to see some likely shocks this year, and these are the two shocks that we have talked about. So the core thesis is that we will see shocks and volatility first, then boom. That is what Tom Lee is predicting. So somewhere between January to October is the period of turbulence, and then Q4 is a period of recovery. And that's where the powerful rally would be. That's not something that many people will be very happy about. Now, however, now people will time the market, but let's see what these shocks are likely to come from. So the Black Swan one is likely to come from the Supreme Court. This, I think, is the bigger bomb. So right now, the Supreme Court of US are reviewing whether the reciprocal tariffs under Donald Trump is deemed to be legal. So two lower courts has already ruled the tariff as illegal, and therefore this actually increases the possibility of the Supreme Court ruling it as illegal. Now, this is a black swan because nobody has priced in a scenario where the Treasury Department of US have to repay $100 billion of tariffs, and the administrative process is frightening as well. And this is a legal risk. Now, it is unlikely to hit the stock market directly, but it is likely to hit the bonds market first with a global shock. And then there could be global contagion. So this is something I think we all want to be aware of. So if the Supreme Court were to rule that Donald Trump's tariffs are illegal, immediately, right, there will be a process triggered to refund, $100 over billion to importers, and deficits will explode exponentially. The bonds market will have a shock, and this would push the government of US into a crisis. Now, in theory, when the tariffs are being removed, prices should come down, and this actually is good for the stock market. However, the crisis on the bonds market could then spill over to the equities market, and there's also a possibility of the White House putting a bandage around this problem by introducing new tariffs under other laws, but there'll be timing issue, and therefore the short-term shock could be quite bad. So this warning alone could trigger an up to 20% correction, which is very major in stock market terms. The second crisis that could happen is that the Federal Reserve chairman will be put to test in a kind of a situation. Now, for some strange reason in US, the stock market always tests the new leadership of the Federal Reserve. So Alan Greenspan, Ben Bernanke, Janet Yellen, Powell all face early crisis tests, and this pattern has been repeated with what we call mathematical precision. Now, I don't know what that shock could be, but the resolve of the Federal Reserve Chairman will be tested to see he's willing to counter panic with decisive, firm, and hard liquidity provisioning, which is monetary policy. So I think this is something we'd like to see. Whether the Federal Reserve Chairman is going to be like Jerome Powell, make tough decisions. So if there's a slow response to a macroeconomic shock of any form, okay, then there will be a massive crash. But if there's an aggressive response, okay, it could be deemed as something more positive. So we don't know what this crisis could be, but we certainly know the resolve will be tested. And by looking at the resolve of the Federal Reserve Chairman and his FOMC, Federal Reserve Open Market Committee, we will know whether good days are ahead or not. So, all said and done, all this turbulence, if Tom Lee is correct, will end towards the end of the year, supporting a bull run that will hit 7,700 points. So, what this bull run could be caused by? Many factors. Number one, AI. There's a perennial story that how good it is going to be. We don't need to repeat it. There's going to be a lot of infrastructure expenditure. And the Federal Reserve is going through a QT ending, which is synonymous to quantitative easing in a mini way, and so on. So there are many factors that can push the stock market up, and the stock market always goes up towards the end of year at least 2/3 of the times. So Tom Lee thinks that 7,700 points is reachable, and there will be a lot of reasons that lead to it. The price earning ratio will be very in favor of a bull run. Historical pattern is in the favor, and finally there will be a capital flow inflow from the money market fund that he talked about for many times. The $6 trillion will start to flow in, which at this juncture haven't flown in a big way yet. So all this will push the S&P 500 to 7,700 points. How do we play this out? Well, I don't know for sure that those crises will happen, and neither am I sure that those bull run will happen. But I know that in the mid to long term, the S&P 500 has survived tons of crises, okay, countless times again and again. So I would be, doing, regular rebalancing, but otherwise I'll be holding on to all the positions and just ride out. I've got one word that I invented that I want to share with everybody again and again. That's called tahanability, right? You just got to press on and hold on through this whole period. in closing, I just would like to share with everybody that there is a famous quotation that is given by Warren Buffett. The quotation is this: the stock market is a place where wealth is transferred from the impatient to the patient. Well, so I think that 2026 is likely to be one that is of high volatility, as well as Tom Lee does. Whether you will go down to 20%, I don't know. But I know that if I can hold on to it well, play it well, even if it comes down, there'll be a lot of opportunity for me to do crash buying. If it doesn't happen, I'll just ride the wave. But I know that I will be ready. So make sure that throughout this whole period, that I've been encouraging everybody is to accumulate dry powder, accumulate dry powder. When it does come, get ready. I'll be firing shots, and I'll find a way to hint to you guys that I'll be firing. And you decide for yourself whether you'll be as gutsy as I do. I am a proven crash buyer for many times, not all the time, but many times. And crash buying has always proven to be right. You simply won't lose money if you crash buy and hold on to it for a very long time. So let's watch on 2026. If it comes, if it comes in a very turbulent way, I am ready. Are you ready? Thanks for watching, and I'll see you, okay, in my video or my live stream. Thank you and goodbye.